Members, SB 1258 is an emergency funding proposition, an important bill that I hope goes all the way because it provides much-needed, critical, stable revenue for our state's overburdened emergency response system. This bill establishes a 4.8% property insurance surcharge to pay for state and local efforts to protect property when emergencies arise. This is all emergencies, members: floods, fires, earthquakes. Currently, California is spending over $1 billion a year off the books, unanticipated fire emergency suppression costs only. So anything, floods, earthquakes, et cetera, would be more than that. It's unsustainable. Our mutual aid system, which is the finest in the world and the model for our national emergency management system, is frayed to the breaking point. We have fire chiefs threatening not to be able to participate because they don't have the resources to send some of their equipment out of their area of jurisdiction. Disasters like earthquakes, floods, fires, and mudslides have hurt the state's economy. They've raised insurance costs, and they've damaged our quality of life. All Californians share in this risk. And the risk of fire and other catastrophic emergencies is shared throughout the state. There is no north-south. We had over 1,000 fires in Northern California last June and literally burned through CAL FIRE's budget before July 1st. It's vital to protect our mutual aid system, as I told you. This bill ensures that local agency first responder services aren't threatened by state cutbacks. They will have a local stream of consistent funding, and the bill requires state agencies that receive funding from the bill to participate in the state's mutual aid system. I know this isn't an easy bill. It is a surcharge on residential and commercial property insurance. It is a small fee, a small surcharge compared to what we are already spending, and it will help stabilize our emergency revenues. With me, and I'm very happy to introduce, is California Emergency Management Agency Secretary Matthew Bettenhausen. He's worked for years on these issues. He's here to testify in support.
Thank you, Senator Kehoe. Yes, sir. All those in support, please begin.
Thank you, Mr. Chairman and members of the committee. And I want to thank Senator Kehoe for her leadership and her chairmanship of the Joint Committee on Emergency Management and Homeland Security. As you all know, and we all know, California faced many risks, hazards, and disasters. Just this week, the governor asked the president for a presidential disaster declaration from the Easter earthquake down in Imperial County, almost $100 million that we have in preliminary damage assessments to the damage caused there. Of course, we saw the earthquakes in January up in Eureka, followed by the earthquake in Haiti, and in the fifth largest earthquake in recorded history from when we've been able to monitor these things, the 8.8 in Chile. We've also done exercises on earthquakes and computer modeling to know that in the Los Angeles region, for example, with a 7.8 earthquake, we would have about 1,600 fires that would develop following that earthquake, from leaking gas to lamps falling, stoves, other fires. And our fire service is going to be challenged to combat those 1,600 fires with broken infrastructures, roadways, and water systems that are broken. So we recognize that there's much that we need to do, and we have many disasters regularly here in California, and to respond to those, we are fortunate to have, as the Senator pointed out, the best in the world mutual aid system. It's a bargain for our citizens and residents and taxpayers because we leverage resources and leverage capabilities. But that mutual aid system is at risk. Because of tight budgets, local fire chiefs, mayors, city council folks are looking very closely at that. They're rounding out their stations. I can give you an example from the station fire. While we had the station fire going on in LA, Chief Denon was dealing with 2 fires over in San Bernardino. We had the Auburn fire going. We had a couple fires up north. Yosemite was burning. We were able to meet through the mutual aid system the requests from all those incident commands. But our surge capacity was taxed and gone. For example, Region 2, Chief Gilbert's over in the Bay Area, Normally, when we would do a call-out, he'd be able to come up with 35 strike teams. He was only able to get 25 strike teams. So a strike team each has 5 engines and all the personnel with that. That's a loss of 50 engines right there. Down in your area, then Chief Tracy Garman was only able to get 3 of her 6, which normally she would contribute. So we recognize these risks are here, whether it's fire, flooding, the risk that we have with our waterworks here, mudslides, chemical releases. All hazards are happening in our communities throughout the state. Fires can happen anywhere, earthquakes can happen anywhere, and this is why the Emergency Response Initiative is intended to benefit everybody. And it's the 4.8% surcharge on all insurance policies throughout the state. It's putting basically a rider or a mutual aid addendum onto each of those policies because everybody would benefit from it and the cost savings that come with it. In the long run, in a competitive insurance environment, and this is one of your areas of expertise, having a more robust mutual aid system, making sure that we can reimburse our local fire chiefs. I mean, most people don't realize local departments pay for the privilege to help their neighbors. We need to reimburse them 100%, and the ERI would provide that money. But by having and moving our mutual aid system forward, we will be able to contain fires, earthquakes, disasters, and prevent them from becoming catastrophic losses. So the lower the catastrophic loss, the lower ultimately insurance premiums will be. As Senator Kehoe pointed out, and the governor has insisted on this, there's also $150 million that would go to local departments, fire departments who are participating in this mutual aid system each and every year. That means they can make investments to enhance their local fire rating. The Insurance Service Organization, the ISO, does those fire rankings, and this is an opportunity for chiefs to invest these monies so that the ISO fire ranking for a community would improve, which in turn would also lower insurance rates. So I'm pleased to be here today on behalf of Governor Schwarzenegger, Cal EMA, and our fire partners, and I urge a yes vote on SB 1258 to support our firefighters, first responders, and to clearly make California safer and better prepared.
Thank you. We have some additional witnesses, Mr. Chairman.
Thank you. Before we go any further, let's establish our quorum, and then we'll continue with the testimony from support witnesses. Call the roll.
Calderon.
Here.
Thank you. Calderon here. Cogdill. Cogdill here. Correa. Cox. Flores. Flores here. Kehoe.
Here.
Kehoe here. Lowenthal. Lowenthal here. Padilla. Price. Runner. Runner here.
Okay, we have our quorum. Let's continue with
We have some
witnesses.
additional fire chief from CAL FIRE. Members, if you're paying $500 a year for your residential insurance, this would be a little under $25 per year, 50 cents a week.
Dale Walters, Director of the California Department of Forestry and Fire Protection, or CAL FIRE. CAL FIRE is a significant recipient of the funding that would be generated by the Emergency Response Initiative. And we are among the first of state agencies that are tasked by Cal EMA during floods and earthquakes, other emergencies, and obviously wildfires. In the wildfire front, one of the things that we have over the years become experts at is organizing large groups of people, and that's one of the reasons that we're tasked to perform when some of these other types of emergencies occur. And therefore, it's a natural fit for us to be part of this. And also, as partners with Cal EMA, 4 of the 6 fire and rescue regions are dispatched by CAL FIRE command centers or operations centers. And therefore, it's very important that we have a very sound wide area network, which is a part of the long-term program for this, because 5 of the 9 major programs that are supported by that wide area network are directly operationally oriented, as well as the addition of firefighters and helicopters for rescue as well as firefighting use. Thank you.
Thank you.
Chief.
Thank you very much. I appreciate the opportunity to be here today. My name is Pat Denon. I'm the fire chief in San Bernardino County. But I'm also here representing the Cal Chiefs Association. I'm the incoming president of the California Fire Chiefs Association. But rather than overwhelm you with statistics, you've already got the information that's in the bill. What I thought I'd give you is an honest fire chief perspective on what is happening to the fire service, especially the mutual aid program. I'm the operational area coordinator for San Bernardino County, so I oversee the movement of all fire apparatus on the fire and rescue side of the house, regardless of jurisdiction. But I'm also the Region 6 mutual aid coordinator, so I oversee San Diego, Imperial, Riverside, San Bernardino, Inyo, and Mono County. And you've heard testimony just a minute ago that the loss of fire engines in the total overall pool is down considerably, and the amount of resources we can put on the road today because of the economy and the declining property tax revenues and so forth that fund fire departments and fire districts across the state is down. In San Bernardino County alone, as most of you may know, we have a history of fire. We have had earthquakes, we've had Newcastle disease, West Nile virus, flood emergencies, freeze emergencies, as well as the longest running U.S. natural disaster, which is a bark beetle tree mortality program. So our fire threat in our resort communities is phenomenal. A couple of years ago, we had the Grass Valley and the Slide Fire. We relied heavily on mutual aid at a time when we were number 15 and 16 on the statewide priority list as far as fires in the state. Later on in the week, we became the number 1 national priority, but in that short interim time, resources were not available because of other competing fires. We as local government chiefs have a great interest in this particular bill simply because we do not have the capability or resources that agencies like CAL FIRE have. Local government fire departments need to see CAL FIRE well-equipped, well-staffed, and strong. Because we don't own helicopters, we don't own dozers, we don't have hand crews, and we can't logistically support large conflagration fires that involve thousands of firefighters. So we rely on CAL FIRE, the National Guard for their aviation assets, a helicopter program for CAL FIRE, the engine replacement program for CAL FIRE, as well as for Cal EMA. To the local government fire chiefs, those are critical. That's where our surge capacity comes from. So I too urge support of this particular bill. Thank you.
Thank you. Next witness.
Mr. Chair, members of the committee, Christy Bauma representing the California Professional Firefighters, pleased to also support this bill. Operationally, you know, our membership consists of firefighters from the smallest, most rural areas of the state to the most urban in the city of Los Angeles, and our organization has unanimously taken a support position on this bill for this reason. It has a mutual aid component that delivers dollars back to every local jurisdiction on a per capita basis, about a third of the money that's raised by this fee. Not only that, but these same local jurisdictions benefit from the fire apparatus that's purchased, OES engines that many local governments now rely on to put into service as needed. That this money will augment that fleet. Also, as many of the previous witnesses have stated, when a local government, LA City, the City of Long Beach, Contra Costa County, whatever fire district or fire agency sends mutual aid anywhere in the state, they're subject to reimbursement if there's money. And so some of the money that's allocated under the Cal EMA budget in this proposal gets sent back to reimburse local governments so they can continue to provide that mutual aid, as well as when local governments have to respond in the city of Los Angeles to state responsibility areas, they are eligible for the money that comes from this fee. And so there are multiple ways this money comes back locally, as well as making sure we have a strong and well-equipped state fire service. We ask for your support.
Thank you. Any other witnesses in support?
Thank you.
Good afternoon, Jennifer Whiting with the League of California Cities. We have a support if amended position. I understand our letter did not make it to the committee. I apologize for that. Our amendments are very minor. We're happy to keep working with the author as this bill moves forward. You've heard from the experts how important this bill is for the mutual aid system that cities rely on so heavily. We ask for your support. Thank you.
What's your amendment?
There are two amendments. One would be a continuous appropriation rather than appropriation by the legislature. The second would decrease. Right now, the bill has 31.3% going to local governments through grants. The surcharge would be decreased by that same amount if that money was diverted for other purposes.
Okay, thank you. I have a question. Oh, another witness in support?
Hugh Bauer on behalf of the Marin County Council of Mayors and Council members, and we are in support.
Thank you. I have a question to Mr. Bittenhausen. How much is in the what's the catch-all fund? Is it CAL FIRE? Where does the money? Where does the appropriate money go to?
There's the emergency fund. Cal EMA would administer this, and once fully implemented, it would generate about $450 million a year.
What is the fund? What was the fund appropriation for last year or this year?
This bill establishes a new fund, so...
Oh, a new fund. So what is the emergency fund called now?
We've got the California Disaster Assistance Act and the Emergency Fund, which CAL FIRE.
And how much is managed in that fund right now?
The California Disaster Assistance, it depends on how many disasters that we have each year, but that can range from $300 million to $700 million, depending on whether we get the disaster declarations.
Who
overall costs for disasters.
And who appropriates that? Is that by the legislature?
That's by
or is
the
that
legislature.
By the governor?
Right.
So anywhere from 300 to 700 million.
Yes.
Okay.
In total disaster costs.
Total disaster costs. Okay.
The E-Fund.
Yeah, the emergency fund is based on an average of the last 5 years, and this year was $182 million.
I'm sorry. This year was 182, and last year was.
There's the regular CAL FIRE budget, and and then there's the E-Fund, which is emergency. And my understanding is, but you will know better. Both of you have the expertise that we overspend out of both funds. So to put it in the vernacular.
Right. To give you an idea, the actual expenditures for the E-Fund for the last 3 years, I'm familiar with. In 2007, the very large siege we had in Southern California was in the neighborhood of $525 million. 2 years ago was $500 million. This year is currently under $200 million.
And we haven't started
so far.
And we're hoping it keeps raining, and we're not into that before the end of June. But that's why it varies, because we have a very wide variance depending on the wind, lightning, the occurrence of arson, that sort of thing.
Okay. Before I ask if there's any other questions from the committee, is there any opposition to the bill?
And Mr. Chairman, that is also at the state level. Remember, there's local expenses as well.
And the local expenses. No opposition. Hearing no opposition. We have a question by Senator Lowenthal and Mr. Runner.
Conceptually, in terms of the concept, I agree that we need to fund this. I'm talking about fairness issues, and I have some real issues that I need to have answered so I can go back to my constituents. And I'll start with, I need a commitment or a statement from you. You mentioned that it's just a small amount of 4.8% on $25. Well, that's not true in my case, and I wonder if I'm paying. I just got my bill for my homeowner's insurance due the 24th of April, so I know right now in 2 or 3 days. I pay a little bit less than $1,000 on my regular homeowner's insurance, property and so forth, and an additional $2,000 for earthquake. Are you telling me, is that earthquake, do I have to pay now $150 surcharge? For Long Beach, which doesn't have, that we're a contributor?
No. It's just on the general coverage. It's not on the specialized.
You're telling me, and that will stay that way? You will say.
It will stay that way, right.
That it's not, that earthquake, because that's the big hit. The people in my district, we are paying tremendous amount for earthquake. And I just want to, so it's not a small hit if we have to include that to that. It's a tremendous amount. And even with that, it's a $50,000 deductible. So I want to make sure.
So on yours, that would be $48 a year, $4 a month.
It'd be $150. It'd be $3,000. Yeah, me it's $48 if I'm not paying that additional $2,000. And you're telling me, as this bill moves forward, that earthquake, all earthquake coverage will not be included in this.
Specialized coverage.
Which makes changes, because that's what my community is most concerned with, is the tremendous cost. We can't even get earthquake insurance, and if you're going to tell us now,
add 4 point on top of that.
On top of that, I will have a riot in the streets in my district. So that's one.
Senator Lowenthal, I notice in the analysis under this bill, item 1, it calls out multi-peril insurance. That is not your earthquake coverage. Our intention is to stick with the basic residential premium.
Okay, but that doesn't mean it's not going to change. It just, as this bill moves through the legislature, so I'm just telling you right now that if it ever includes earthquake insurance, which is so expensive in California to those parts, and we're a contributor city. We help in mutual aid and fires. We don't really come back, and I don't mind doing that as long as what our major, and I'm not even saying if there wasn't an earthquake we might not even need mutual aid, but it is so expensive to begin with. Second question, in the fairness, state responsibility areas, are they paying the same rate, 4.8%? Why? We are now contributing, we shouldn't have been building those homes in the state responsibility areas.
That's true. Right.
We've all talked about this before. Now we're subsidizing state responsibility areas because when there are major fires, the major thing a CAL FIRE does, not the major, is first they're wonderful, don't get me wrong,
right.
But they try to protect homes. We know they're in areas where probably we shouldn't have been building, and they don't even charge for many of those for fire insurance because they don't have local fire departments, and they use. Why are they paying the same amount?
The reason why we did this across the board, because first of all, the insurance rates are based on risk. This is an all hazards, all risk program in terms of where in assessing this across the state. Take, for example, as you say, it's not just the SRA people who are going to benefit from the mutual aid system.
But they're going to benefit tremendously. Let's be honest. They are going to benefit.
Senator Lowenthal, believe me, I'm very sympathetic. But when fires start in the backcountry, they burn into the suburbs.
But when we protect and we call mutual aid, it's for homes.
Homes, property, and lives. Lives first,
right.
Property second. We can parse this any way you like. We've looked at parcel tax. We've looked at state responsibility area extra fees.
And what happened?
State responsibility areas aren't big enough. There's not enough structures out there to raise any significant. It's a tenth. It's a tenth of what this raises. It raises about $50 million a year. This raises close to $500
I'm not even
million.
saying, Senator, that we shouldn't be asking everybody. I don't mind paying my fair share. All I'm in Long Beach, which we're not going to have a forest fire. I don't mind paying my fair share. I'm just saying why are we paying the same amount as an SRA?
Because this is a surcharge across the state, because we are in this together, because you may not ever have a forest fire near your neighborhood, but you could have street flooding, you could have an earthquake, which would result in fires. This is, I'd say this is as drilled down as we can make it, as minimum amount, and still on the consumer, and still raise enough to contribute significantly to some stability in our emergency service funding.
So, and let's be clear, $150 million of this, for those who are communities, cities who are participating in this, will get that money to help build their own capacity and capability, to do their own hazard mitigation in their communities, so it's benefiting everybody across the state. But it is all hazards, all perils. So, for example, the 1,600 fires following an earthquake in the Los Angeles region, the aviation assets, that's in an urban area. Senator Kehoe in 2003, 2007 saw what fires can do when they get in urban areas, and that's why everybody needs to contribute to it. The fire engines we buy are not just fire engines, they include urban search and rescue.
And I don't disagree, and I'm willing to pay my fair share. I'm just saying the operative word is fair. I don't know why it's the exact same across for all. That's all I'm saying.
This is a lot fairer than the system is now, which is Long Beach sending your firefighters and your fire trucks around the state to help and not being paid back for your own costs.
Absolutely. And I'm not saying I won't be supportive.
That local funding restored.
But I still haven't heard why SRAs aren't being charged a higher rate.
You know,
I think she did address that.
Okay.
She said the pool isn't big enough.
to charge a higher rate?
Even if you charge a higher rate?
I'm not saying we're still
yeah.
being charged 4.8 here. It makes me feel a lot better that those homes that are the most we're fighting to protect potentially are paying.
But there's a lot fewer of them. There's
I know,
a lot
and I'm
fewer
not
of them.
saying to cut my rate.
Senator Lowenthal, we looked at a $50 parcel tax or a structure tax with the LAO and CAL FIRE a couple years ago. It raised less than $50 million statewide. You can try to do a proportional service, but that's not the way this bill is designed.
I know. What about the LAO? Does the LAO support what we're doing?
You know, I don't actually know if he's even reviewed this specific measure. Okay, then you get into they think it's a tax. The LAO, the legislative analyst, no, not the analyst, but the legislative council has another opinion on that, and so other than the definition of whether it's a tax or a surcharge, they haven't looked at the economics of this, I don't think.
Because I thought when I was before that they were the ones that said SRAs should be paying a much larger, historically is what I'm saying.
And yes, they do love that theory, but there's just not enough out there. And you know, Senator Lowenthal, we could levy $100 per structure in the backcountry. It's not going to be enough to help 10 square blocks in Los Angeles or Long Beach or San Diego. You know, that's where the people are.
Let me interject here, Senator Lowenthal. The policy, the risk is higher in those areas, so their policy premiums will be much higher. Therefore, they're paying more.
Right.
At 4.8, they're paying more than most people.
Exactly. While the percentage is the same, because it's the multi-peril, the risk, it's higher. And so the amount that they pay will be higher in those areas.
All right. Well, you did calm me down a little bit when you told me about my 2,000, that bill that just came for
Senator,
earthquake insurance.
Senator
that's not part
Lowenthal, let me calm you down some more. In regards to the earthquake exclusion, the language on page 5 of the bill, lines 30 and 31, references to lines 1, 4, and 5.1 of the annual statement. Just say they apply to fire, homeowner multi-peril, and commercial multi-peril.
Thank you. It was very hard to understand that when I first read it.
I got it. Yeah, so
really protects my earthquake
I have a consultant and you don't. So. Senator Runner had a question.
One final comment on the LAO. They would like more flexibility with the funds. They'd like it to go straight to the general fund, which, we think there's a better way to do it by giving it to the emergency services. Thank you.
Senator Runner.
Just a couple of questions, and before I do that, it seems to me what we're talking about is kind of like one of the first priorities of government. It's one of the first priorities of what I believe tax dollars should already be going for. And so I struggle with this idea that says now we're going to go ahead and try to figure out how to create a new way to fund what I think one of the first roles of government should be doing. I don't know what is more essential than making sure your houses don't burn down. So my struggle here is that what we've done, what we're doing is we're holding out what is a very important emotional issue and saying now we're going to try to find a fee or a tax to try to go ahead in order to pay for it, when it is that, again, I think it should be first off the top anyhow. But let me just follow up with a couple of specific questions. One is the issue of any kind of a maintenance of effort. What's in here that keeps the state in our general fund just deciding that, hey, there's this revenue stream. We can go ahead and cut back on some areas because now there's this new revenue stream from this surcharge. What's the protection for that?
Well, the difficulty, of course, you have is the legislature can always revisit laws that they have passed.
Right.
That being one of the concerns that the League talked about in terms of, look, if you're going to divert these funds that have been obligated to support local efforts in the mutual aid system, then automatically there should be a reduction then in the fee if you start rating those funds. But the difficulty, of course, you have is that requires legislative discipline in terms of not going into special funds when you get into difficult budget times.
I'm talking about just the regular straight general fund that we have right now that we're funding.
Right.
Just the idea that all of a sudden we just decide that, we've got this ability now, we could just kick it up a couple percent and cut back a little bit on our general fund support and all of a sudden take care of it. There's no real protection from that to happen in the future, is there, in this?
There's not maintenance of effort language in the bill, but, we're open to that. We're open to it to the extent that I agree with you and that we want the money to go where it's intended to go.
Yeah, the problem is I don't think you can write a piece of legislation that has maintenance of effort in it in that sense, and that's the problem. And so what you're doing is you're opening up the door to a potential problem that which you cannot solve. And you're making this fundamental shift of what is a basic purpose of government, one of the first priorities, and you're saying we're going to go ahead now fund it with a special fund over here. And what you do is leave wide open then into the future the fact that we just take money away and away and away over on the general fund side where it should be one of the highest priorities, and we keep raising the tax on the other side in order to somehow meet the need. And what's going to happen is, I know it'll happen, we'll have the fire chief, we'll have the firefighters, we'll have everybody coming in every year saying, yeah, you got to do that, you got to do it. And the shame of it is, no, we shouldn't do it. We should have just prioritized it in the first place. And that's the difficulty that I have with the concept.
I do have a partial response. I'm going to let our consultant respond to the entities issue, which is being addressed.
Yeah, just within the body of the bill, on the issue of non-supplantation, there is a provision at the bottom of page 3 that says funds allocated to entities pursuant to the section, this is really the local government piece, right, shall not be used to supplant any existing funds allocated to that entity. So you have the language.
That I believe is to supplant the money that goes to the local government.
Right.
Correct.
And it's backed up by a provision that says on a date identified by the Secretary of California Emergency Management, each fire and rescue operational area shall submit a 3-year strategy to the Secretary for the enhancement of fire and rescue disaster mutual aid. The plan shall satisfy the requirements and shall specify how fire entities within the operational area will use the funds over the next 3 years. So you at least have non-supplantation language applicable to local entities and those under the CalEMA program, and a planning process to kind of set out how are we going to target the funds to get enhancements out of the system.
But there's nothing that prevents the legislature from going ahead and decreasing general fund obligations in the future in order to say, let's shift going back over to this assessment.
As you know, Senator Renner, the legislature can limit what a future legislature can do. So we can't do that. You also mentioned that this should be the first priority, and that if that were the case, we would have enough. Fact is, the demand for services and the number of incidences have increased beyond the baseline funding, and they're going to continue to increase. All the fire predictions are that fires in the western U.S. will be larger, more frequent, and more intense as we go into the future, whether it's climate change or bark beetle or whatever. So we are not adequately funding our first responders, and that's what this bill attempts to address.
And while public safety is government's first priority, when you're dealing with a system of mutual aid like this, it is kind of a unique thing because it's not completely state ownership, it's not completely local ownership. You've got this, so it's the support for having this ultimately benefits the taxpayers because through using mutual aid, you're sharing the tools in the toolbox with other communities, and having this dedicated funding helps leverage those capacities and capabilities.
Again, I get all that. I just think I think we're going to be setting up a system to where every year when there's difficult budget times, there's going to be this effort to go ahead and cut back on the general fund and shift it on over then to a special fund in terms of a special assessment. And I think it's going to put firefighters, fire chiefs in the position to every time having to be there, because otherwise you lose opportunity and money, and the public is not safe, and your commitment is to the safety of the public. So that's going to put all of you here in those years trying to fix it.
We have a question by Senator Price and then Vice Chairman Cogdill.
Yeah, hi. Not a question, but a comment. First of all, I want to thank the author for and those proponents for addressing a real critical problem. Obviously, these emergency situations play a toll on everyone, no matter where they occur, and whether it's an assessment or a surcharge or a tax, no one likes it. But I think that given the requirements for critical emergency mutual aid responses, I think it's a fair way to do it. I supported this bill when in GO. I'm prepared to support it now, and I'll move the bill when it's appropriate, Mr. Chairman.
Thank you. Senator Cogdill.
Thank you very much, Mr. Chairman. I have similar concerns to those that were raised by Senator Runner, and the language that was read in the bill concerning the subvention issue and existing funding. To me, we're basically setting a floor here to say that whatever it is now, we're not going to lower that, but we all know the costs are going up, and so where are we going to get the monies that we need to continue to provide the service into the future? And it seems to me that the first place will be to raise this rate. So I'm concerned about that. Are you familiar with the Jeffries bill that was in this year that would provide funds, I think, through the Trank
oil for engines,
yes,
I call it.
What's your position on that? I know the administration supports the Trankian Ridge project.
We've been in discussions with the Assembly member, but again, the funding that comes from that is not nearly enough to support what we're talking about here in terms of the mutual aid efforts. And this is the administration's proposal and bill with the sponsorship of the Senate.
Okay. Another question.
It would be years in the future, too, Senator Cogdill.
Okay. Senator Keogh, you mentioned the prospects relating to rangeland fires in the future, and you're right about that. Certainly one of the concerns that I and many that represent a lot of areas that are covered with SRAs is this whole issue of the fuel buildup in the forests and the lack of treatment thereof, which many of us believe obviously could go a long way to reducing, if not alleviating, a lot of the need to fight these fires ultimately, and certainly to keep them in a more manageable place than they are today, where they very easily become catastrophic as a result of an errant lightning strike or what have you. So my question is there any, are any of these funds allocated towards forest thinning projects or any other kind of preventative measure, or just to deal with an increasing cost of a forest that we don't properly husband?
There's not, in a sense, a broad program to support that, but communities who are living in the SRA, if they're participating in the mutual aid, the funding that they get through our program, they can use it towards those types of hazard mitigation projects, which that would be one example of it.
Is there a limit on that as to how much they can?
It's just, and the overall limit is for those communities participating in this, what we expect to generate would be the $150 million a year, so, and then their fair share based on their participation in the mutual aid system. So.
About 31% of the total raised would be directed to local jurisdictions. That's the clearest delineation, and then and those local jurisdictions would be required to participate in mutual aid. 99% of them do already.
Right.
So, if the locals chose to operate a fuels management program, I think this would help fund it, or would be eligible to anyway.
It would be eligible.
Thank you.
Thank you. Any other questions? I have some questions/comments. First of all, getting back to existing funding, Ms. Betancourt, you gave me some numbers for 07 and last year, and 07, 08 and last year, probably averaging about $500 million. This measure raises $500 million in its first full year.
Correct.
According to the analysis, 478 million. I'm just rounding up a little bit. How do we know that? How do we arrive at that figure? And addressing Senator Runner's concern as well on shifting everything over to these special funds, if we're overfunding these things or sending money into this a special fund that would encourage us to shift general fund obligation over to this special fund, then certainly it's inevitable that we will see those funds being shifted. But if we can keep this at a reasonable figure, and my question is, is $500 million reasonable? Is $250 million reasonable? And, why does it have to be 4.8%? I mean, I understand, I support this concept, and I think we need to continue to find ways to fund these services and reimburse local governments. But where do we arrive at this figure, and why can't it be toned down a bit? I mean, there's people that are going to be experiencing, they're either losing their home or experiencing increased payments right now, and to pay another, $50 or $60 on their policy could be a hardship.
In consultation with our fire partners and looking to continue to grow the mutual aid system, this is where we came up with the 4.8% for given the kind of catastrophic losses that we can face here in California. It's not just the fires, but when we look at what the funding's going, having during fire seasons the fourth officer on the engines, being able to fund that and sustain that is how that came up with the 4.8. In addition, we wanted to be able to reimburse local fire departments and local communities on a 100% basis for participating in the mutual aid system, so that it would be no cost. And that's where we came up ultimately with the 4.8%.
So if we paid $500 million last year in costs,
for fire suppression only, that's
right. That's just the E-fund. For example, we're not capturing the costs that are not being reimbursed to all of those local departments.
It doesn't include reimbursement.
No, we catch where we do some of the reimbursement, where we do the 75% through the California Disaster Assistance account. But that 25% that the local governments, that they're not getting reimbursed for, absent a federal disaster declaration. And so those costs are out there for local governments that they're not being reimbursed for. The E-fund is specifically what's going to the firefighting activities of CAL FIRE.
And a clarification, the large number that you latched onto there, the $500 million, that was 2 years ago. Or I should say the previous fiscal year. The one before that, 525, that was the highest in history. So those are big numbers, but and will grow as we average out of that. We'll just see what the next year's bring. But as I said, we're
what if
well ahead of this.
What if this 4.8% raises too much? What happens to the excess funds? I mean, we're coming out of this foreclosure market, and this homeowner. People are going to be buying homes. There's going to be more insurance policies purchased. I mean, there's going to be a lot of money at 4.8%. What happens to the excess money when it's not used?
What the bill provides for is that we can set up these grant programs to deal with issues, as Senator Cogdill brought up with, that you can start going and doing some of these hazard mitigation projects that need to be done, because that in turn is also saving money if we get in front of these things with the prevention and protection work that we need to do. So again, we can approve those projects in the out years if there's additional funding, but it needs to go to all hazards, prevention, protection, response activities.
Senator Calderon, could I add something? First of all, we could exercise our oversight as a legislature if there's too much money and either redirect it or lower the surcharge. That would be, our first response, a rollback. Second, and I think we really need to think about this, we don't know, all of us, how big a hole we are already in. In 2003, when the Blue Ribbon Task Force that was formed under Governor Davis and Governor Schwarzenegger jointly started to look at the huge fire that took place that year, I think the number of new trucks that the commission came up with was 119 new trucks statewide for
150 additional trucks that we should have added to the mutual aid system. And this
Then,
is our program
in
where we
2003.
invest, we buy these trucks that are not only firefighting vehicles, but also urban search and rescue type 3 equipped, and we put those in local communities.
And how many
Pay
have we
for
bought,
them.
Mr. Bettenhausen?
We've only bought 19 since that, and that was part of the replacement program.
So that's a 130 truck deficit right there, not to mention what is happening at the local level with aging out equipment and lack of maintenance. I'm not saying we could spend an endless amount of money, but there are significant problems that have to be addressed if we're going to get our emergency response system back to where it was, even 10 years ago.
I totally get it. I just don't understand. I'm looking at the support list and why there isn't one fire department, either county or municipal, in my district that should be dying to get reimbursed. That's not supporting this, and I just don't. I know you may not be able to answer that, but it's just
it has
befuddles
with
me.
the Cal Chiefs, which has the representation of all the chiefs throughout the state, both city and county. I mean, this has been something that they have been
Christie's
pushing and is representing, and you've got California professional firefighters here.
Yeah, Christie.
If I may, Mr. Chair, the California Professional Firefighters, as you know, represents state and local firefighters in California.
Right.
My executive board is made up of the president of LA City firefighters, LA County firefighters, San Jose firefighters, Burbank firefighters. They all voted and agreed. That's why I'm sitting before you supporting this bill on all of their behalfs.
I'm just looking at the list. They're not on the list. So.
And on behalf of the California Fire Chiefs Association, I'm not aware of any single fire chief representing any fire district in the state of California that's in opposition.
Okay.
Senator Calderon, we'll get on the phone. We'll get your letters. We'll get your letters right from the district.
Any other questions? Is there a motion?
Senator Price.
There's
Thank
been
you
a
for the
motion?
discussion, members.
Sure. No, there isn't any. Call the roll.
Calderon. Cogdill. Cogdill, no. Correa. Cox. Flores. Flores, aye. Kehoe.
Aye.
Kehoe, aye. Lou. Lowenthal.
Aye.
Lowenthal, aye. Padilla. Price.
Aye.
Price, aye. Runner. Runner, no.
It's 4-2. We need how many votes? We need 6 votes.
Thank you.
So we'll hold the roll open.
Thank you.
Okay.
Senator, I have Senate Bill 1258. Oh, excuse me. Don't worry, we got another one here. 1344.
1344.
Didn't vote for Correa or Calderon? Calderon didn't vote. He stayed on.
Hello, Martha. Thank you, Dean. I appreciate it. Hey, how are you doing? Yeah, right there.
I was going to mention it. Go, please, go ahead.
Okay, thank you, Mr. Chairman.
You're welcome.
Raise taxes.
This is, SB 1344 removes a sunset on a bill passed earlier that gives the ability for local agencies to invest a portion of their surplus funds in certificates of deposit at an independent community bank that uses private sector deposit placement program. Today, there are 55 community banks in California that have local agency deposits, which total $2.2 billion, which can be recirculated in the community through small business loans and other banking services. By continuing this program, the banks are able to continue to make these small to medium-sized business loans, which benefit California's economy and help those businesses grow and create jobs. The bill is supported by independent bankers, California Bankers Association, and the California Municipal Treasurers Association. There's no known opposition. We have supporters, including San Diego County Treasurer. I'm delighted to welcome up here. Margaret, go ahead.
Yes. Margaret Gladstein on behalf of the California Independent Bankers. We're the sponsor of this measure. We were also sponsor of the original law, which allowed for local agencies to make deposits in community banks that utilize a network to ensure that FDIC insurance is available for a deposit that goes beyond the FDIC insurance limit. We think this is a beneficial program for both local agencies and community banks because they are able to take these local deposits and in turn reinvest them in communities and reinvest in small and medium-sized businesses, which are helping our economy. This bill simply removes the sunset. We think it's a viable, ongoing program, and we appreciate the committee support and the author bringing this bill forward. Thank you.
Thank you. Question by Senator Congdale? Want to wait till after testimony? Mr. Treasurer.
Yes, my name is Dan McAllister. I'm the elected San Diego County Treasurer Tax Collector, and I'm pleased to be here today to support this bill of Senator Keogh because I think it extends options that we otherwise would not have and gives us abilities to invest in areas that we otherwise would not be able to invest. I wanted to give you a little bit of background on my office. Last year we invested about $6.3 billion. We represent about 110 different public agencies throughout San Diego County, including 42 public school districts, 5 community college districts, the airport authority, water and fire districts, as well as public cemetery districts. And without an initiative and a law like this, it really hampers our abilities to reinvest monies locally. And one case in point is something called the Local Banking Initiative. I've asked that the Sergeant-at-Arms post and give you a copy of a folder which has information about a program that we successfully launched in San Diego County in April of 2006. This was a program that otherwise would not have been possible except for this law. So we are in total unequivocal support of this law being extended. We would encourage your yes vote on this law. And let me just give you a little bit of the details of our program. When we started this program, we weren't sure how well it would go. We started and we initiated a program with 17 local banks, community-based banks, independent banks, and regional banks doing business in San Diego County. The underlying premise, of course, is that they are in very good, close contact with the communities they serve, and they were in a position to reinvest that money back into our communities in San Diego counties. We set as some lofty goals, $10 million first year, $50 million for our third year, and by year 5, we wanted to see $100 million deployed into this program. I'm pleased to tell you that at 21 months, we hit our 5-year goal. We now have $100 million deployed, and were it not for this legislation and this law, that would not have been possible. We hold these banks accountable. We hold them and their feet to the fire to make sure that they do the right thing and that they're investing these dollars back into San Diego County, and so far the program has worked very well. So I would commend to you this legislation. I want to personally extend my thanks to Senator Keogh for seeing the need and jumping on it, because I think this is something that will serve the interests of all public treasurers throughout the state of California. I know really one of my counterparts is here today, Ms. Williams from CMTA, the California Treasurers Association. They represent over 1,200 different public agencies throughout California, and they are also in support of this bill. So I couldn't say more good about it, and I want to be happy to answer any questions that you might have.
Thank you. Yes.
Thank you, Mr. Chair and members. Melissa M. Alexson with the California Credit Union League, also in support of the bill.
Thank you.
Mr. Chair and Senators, Kevin Gould with California Bankers Association, also in support. Thank the author for carrying the bill.
Hi there.
Hi.
I'm Kelly Williams. I'm the president of the California Municipal Treasurers Association. Like you said, we're a 1,200 member strong organization of public treasury officials of cities, counties, and special districts. CMTA is in full support of SB 1344, which proposes to remove the sunset provision for the CDARS program. This program is an integral part of municipal treasurers' ability to effectively and efficiently manage and monitor their CD portfolios. I thank you for this time and opportunity to speak on this important legislation.
Thank you very much. Any others in support?
Mr. Chair and members, Hugh Bauer on behalf of the City of Santa Rosa, and we found that the ability to invest surplus funds in this manner has been both prudent and beneficial, and we stand in support. Thank you.
Great. Thank you.
Thank you.
Any others in support? Any witnesses here in opposition? Seeing and hearing none. Questions by the committee? Senator Connolly.
Thank you, Mr. Chairman. I support the program. I think it's obvious that it's worked and worked well and provides an important option to local government and agencies. My only suggestion would be, given the the environment that we're in now relating to financial crises in general, and I've been around long enough to have lived through the savings and loan crisis and everything that came out of that, and all of the safeguards we thought we put in place to keep those kind of things from happening, and now we all know what's going on and has gone on over the last couple of years in financial markets. It just seems to me that it would be prudent, out of an abundance of caution, to extend the sunset maybe another 5 years rather than to completely remove it. Again, given what's going on right now at the national level, and who knows what else will come out at the state level over the next couple of years, just to see how all of this falls out. I certainly wouldn't expect any problems, but to me, from the standpoint of the legislature, that seems to make more sense to me. But again, I don't have any issues with the program at all.
Thank you, Senator Cogdill. We had talked about extending the sunset, and what I'm being told, and I'll ask the experts to respond also, is that the banks want a stronger signal that this program is going to continue. These are all state-chartered banks. I mean, we think that a 5-year sunset would be too short and would really put a chill on it because the loans roll out. I'll ask Margaret to expand on that.
How long was the previous sunset?
The bill originally passed in 2006, and the sunset is for 2012. Well, we certainly appreciate...
6-year sunset?
5-year.
Originally, or
5-year?
I think it was originally 5-year.
Okay.
So, we've
had no problems.
Yeah, appreciate the recommendation for sunset. We would prefer to avoid one if we can. I think there's a rationale to do so. The analysis does a nice job discussing about the program has been tested. Unfortunately, in these tough times, there have been banks that were participating in the institutions. The FDIC insurance was there as needed. So I think we've seen the test. I think that, and I'll let Mr. McAllister comment as well, but I think if there were a problem, one of two things would happen quickly. The first thing would happen quickly. Before the legislature would probably have time to act or the sunset would come aboard, the local agencies that were making these investments would become acutely aware that a problem existed within the program and would probably pull their funds back and invest them in a different manner if any problems arose. Secondly, obviously, even without the sunset, the legislature at any time could have an oversight hearing and or could introduce a bill to terminate the investment authority.
Well, and I appreciate your comments, and I understand the realities as it relates to the current parameters that we're operating in. But again, there's a lot of fluidity right now in the whole policy debate relating to the regulation of banks moving forward. And it seems to me, unbeknownst to any of us at this point, there could be some unintended consequences that might change all of that. And I'm always, again, a little bit leery about the ability of banks to foresee these problems and to react appropriately, because, quite frankly, that's not been the case, and why we've ended up in a lot of instances and the problems that we have. So, again, I certainly don't foresee any problems. It just seems to me to be more prudent to have an opportunity to look at it again and make sure that everything is continuing to work the way we'd envisioned it.
Thank you. Anyone else like to testify? Any other questions, Mr. Correa?
Yeah, that's a good point you bring up, Mr. Cogdill, on, at the right time, the analysis on page 3 points out that, since 2007, we've had 209 banks fail across the country, and so this is an interesting issue, and I do have concerns. Yet at the same time, as I look at, Mr. Cogdill, the history of our deregulation of financial institutions in this country, maybe some of us look back to the days pre-Reg 64 when we got rid of Reg 64 and we let banks and non-bank institutions merge, and this created some very interesting implications for not only the U.S. but I think world financial markets. Or the days when the SMLs were regulated and you could only get 5% return on your bank account. Those were the good days. I think today you have a different, almost Wild West, so to speak, when it comes to where you put your money. And as I look at being from Orange County and having been famous for many things, including the biggest biggest municipal bankruptcy in the history of the United States, I can understand where you're trying to put some of your safe money in some of these CDs, trying to, I guess, come up with the safest instruments, so to speak. And I would say that probably the safest thing would be to do is to have a good treasurer that is not asleep at the wheel. I'm not saying that you are, sir, but,
I appreciate that.
When we had Merrill Lynch advising our treasurer back in the mid-'90s, some interesting things happened.
Yes, they did.
And I think ultimately, I think we can lead a horse to water, but if you're not watching what's going on Wall Street, we're going to have some major problems. So I'm going to be supporting this bill, knowing that the risk exists of all these bank failures, yet as I think about what you're trying to do, which is diversify your risk by investing in a different pool of CDs, none of which is over $250,000. It seems like, I guess, given the environment that we're in, probably this is about as close as you get to the full faith and credit or the risk-free rate, which is the United States backing, which is supposed to be still the world's risk-free rate, so to speak. So I'm going to go ahead and support this bill. But again, we learned a lesson in the mid-'90s in Orange County, and I hope you keep that one in mind, sir.
Yes, we do. And as a matter of fact, if I could respond, sir.
Not necessary, but go ahead.
I think that we're in the business of being vigilant every day, and we know of the perils that lie out there. And I think it's important to note that the beneficiaries of many of the programs that have been spawned by this law have been smaller community banks and independent banks, not the large East Coast banking conglomerate or investment banks. And it's intriguing to me to note, too, that the banks that we monitor, the banks that we invest with, we regularly work with and consult with the FDIC to monitor to make sure their ratios are in sync with where they should be. We have actually pulled 3 banks from the fleet that we've invested with, but I would encourage you that the first 5 years of this program really did sort of see how it would work, enough to know that you have the power later to amend legislation or to change the law. And so I would encourage you to at least not necessarily put in another 5-year sunset, because it will give us the ability.
On that point in regards to sunset, I think my view on sunset is that we put them in place in order to see a program work, then they come back before us, and then it gives us an advantage to go back and take a look at that. It seems to me that this program has done that. We've had a chance, and quite frankly, we've been able to watch it in a pretty volatile banking system, and it seems to have been working okay. So unless there's, it seems to me, a concern that we have for the future, it seems to me the program has worked. I would say we ought to go forward with it. And quite frankly, if the environment changes, I think the fact that it would change at the same time that we would be doing some kind of a sunset review would be truly unique. And, if something changes out there in the market, then we have the chance to respond to it at that time.
Is that a motion, Mr. Runner? Mr. Correa, you had...
I was just going to say that I think you addressed my concern that Mr. Cogdill brought up, which was to make sure that you're monitoring the credit worthiness of the S&Ls where you invest in. We don't second bill, so...
Great. Call the roll.
Senator Cogdill, could I just ask you to please reconsider, because it has been without blemish. These are our local banks.
Well, and again, I'm planning to vote for the bill.
Thank you. Right.
I just felt obligated to point out the realities that we're living in right now as it relates to the financial crisis. And this, how many times do you think it's been said over the last 20 years that we can see this stuff coming and we can make adjustments and don't worry? So that's all I'm saying. We've heard it all before. I've heard it throughout my career, and we just don't seem to be able to get beyond it. And the debate that I know is going on right now in Washington, these are comments that I'm hearing. They don't think there's anything they can do that will keep us from another financial crisis. So again, from that standpoint, I think it's important to keep an eye on this stuff.
And I agree, and I appreciate all your help with this, too. Thank you.
Great close, Senator Kale. Call the roll.
Calderon.
Aye.
Calderon, aye. Cogdill. Cogdill, aye. Correa. Correa, aye. Cox. Flores. Flores, aye. Kehoe.
Aye.
Kehoe, aye. Liu. Lowenthal.
Aye.
Lowenthal, aye. Padilla.
Aye.
Padilla, aye. Price.
Aye.
Price, aye. Runner.
Aye.
Runner, aye.
It's 9 votes. The bill is out. Do we have any other?
Thank you, Senator.
That's everybody.
Thank you.
Okay. Thank you. We're going to do the consent file right now. Items 5, 6, 7, and 8. So we'll call the roll.
Calderon.
Aye.
Calderon, aye. Cogdill. Cogdill, aye. Correa.
Aye.
Correa, aye. Cox. Flores. Aye. Flores, aye. Kehoe.
Aye.
Kehoe, aye. Liu. Lowenthal.
Aye.
Lowenthal, aye. Padilla.
Aye.
Padilla, aye. Price. Aye. Price, aye. Runner.
Aye.
Runner, aye.
I think we're the only one left.
That's 9 votes. That bill is out. We're going to lift the call on item 2, SB 1258.
Bill just went.
Calderon.
Aye.
Calderon, aye. Correa. Liu. Padilla.
Aye.
Padilla, aye. That's 6-2.
6-2, the bill is out. Mr. Runner, you are presenting today on SB 1363.
Yes, we are. Thank you.
Hope you had a nice flight in.
I did. And
Glad to see you here.
Glad to see you didn't have to hang around for me. You had work of your own to do, so I appreciate that. Good afternoon, Chair and members. First, I'd like to thank the committee staff for their help with SB 1363. Based on their recommendations and extensive meetings of with the sponsor, the sergeants are passing out the author's amendments that will delete the provisions of the bill relating to the examinations given by the Department of Corporations and addresses questions 6A and 6B in the committee analysis. Has that been distributed, I assume? Okay, they got it? Okay. Again, we appreciate that. This was started out in a lot of different directions, but I think we've narrowed it down to something that I think everybody feels okay about. As proposed to be amended, SB 1363 will ensure that new escrow law licensees and escrow law licensees that undergo a change in ownership fully understand the requirement of escrow law by requiring them to complete a course in escrow management within 12 months of the issuance of a new license or change of ownership. California escrow law contains the most stringent requirements nationally for escrow and settlement agents, and it is important that these new licensees fully understand them. I have Tim Egan here with the Escrow Institute of California to answer any questions. I'd ask for your aye vote.
Thank you. Anyone here in support?
Mr. Chairman, Tim Egan with the Escrow Institute of California, the sponsor of the bill. We represent the Department of Corporations licensed escrow agents and appreciate the committee staff work on some noodling here, important noodling on the bill to make the bill more specific and address some of the gaps that we had in the original language, and ask for your aye vote.
Thank you. Any witnesses here in support or opposition? Seeing and hearing none. Any questions by any committee members? Do we have a motion with amendments as amended? So moved. Call the roll.
Calderon.
Aye.
Calderon, aye. Cogdill. Cogdill, aye. Correa. Aye. Correa, aye. Cox. Flores. Flores, aye. Kehoe. Aye. Kehoe, aye. Liu. Lowenthal.
Aye.
Lowenthal, aye. Padilla.
Aye.
Padilla, aye. Price.
Aye.
Price, aye. Runner.
Aye.
Runner, aye. That's 9-0.
It's 9 votes. Your bill is out. Congratulations. This concludes our hearing for today. Thank you very much.
Thank you for your